Hello, everybody. Buffy the Rate Slayer here, and we are back with the latest episode of the May weekly Market Insight series directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Global markets suffered overwhelming bad news, causing significant losses in stocks. Pessimism prevailed worldwide after China's economy struggled and worsening geopolitical tensions that added to the negative sentiment. UK inflation surpassed predictions, increasing expectations of further interest rate hikes. However, the biggest concern for investors remains the same: whether or not the US politicians will be able to reach a deal to raise the debt limit before the government runs out of money. Let me get you up to date on the debt ceiling. Let's jump right into it. So, the United States Congress first introduced the debt ceiling, which is the upper limit of money that the government could borrow, in 1917. The measure meant that the government no longer needed approval from lawmakers over every debt issued. President Joe Biden and House Speaker Kevin McCarthy had productive discussions, but the agreement still remains elusive. Traders were anxious with limited time before June 1st, when the Treasury may run out of cash. Markets have been showing nervousness over the standoff, with Treasury bill yields scheduled to mature early next month, surging past 7%, while the S&P 500 index has declined for 2 days. Economists project a U.S. default could trigger a recession, with widespread job losses and a surge in borrowing costs. May's FOMC minutes added more uncertainty to investor sentiment, as Fed officials were split about whether or not to hike again in June and by how much. They did agree that the upcoming decision would be dependent on data released in the next few weeks, such as May's unemployment and CPI prints. The Commerce Department said that the gross domestic product climbed by 1.3% in the first quarter, compared to the previously estimated 1.1% increase. Economists had expected the pace of GDP growth to be unrevised. The Labor Department data showed Thursday that applications for U.S. unemployment benefits edged up as the initial unemployment claims increased by 4,000 to 229,000 in the week ending May 20th. Here's how the housing market is doing. Well, U.S. mortgage rates rose to more than a 2-month high, reducing home purchase and refinance activity. The index of applications for home purchases fell 4.3% in the week ending May 19th, to the lowest level since early March. The MBA's index of refinancing applications also declined, falling 5.4% from the prior week, also to the lowest level in more than 2 months. That contributed to a 4.6 drop in the overall measure of mortgage applications. Government data showed Tuesday, U.S. new home sales unexpectedly rose in April for a second month, indicating builders continue to benefit from limited inventory in the resale market. Purchases of new single-family homes increased 4.1% to an annualized 683,000 pace last month, from a downwardly revised 656,000 rate in March. So let's wrap it up. All right, guys. Federal Reserve Bank of Minneapolis President Neil Kashkari said it's a close call for him if the central bank should raise interest rates next month or pause, while it monitors the outlook for inflation. Adding to it, the Federal Reserve Bank of St. Louis President James Bullard said he expects the central bank will need to raise interest rates twice more this year to put an end to inflation. Some officials have signaled support for a pause at their June 13th and 14th meeting. We'll just have to wait and see where it takes us this time, right? Woo, don't hold your breath. Well, that's all we have for this week, everyone. As always, join us again to get more market updates and the figures of major economic data. Stay updated with our news, and our trading desk will always keep you informed with our pricing incentives. Have a great Memorial Day weekend, everybody. Buffy